Alright, welcome everybody to another video on the After Hours channel. This is going to mark episode 9 of Road to 1 Million. If you guys are unfamiliar with what that is, I'll be tracking this portfolio that you see on your screen right here all the way to $1 million. You guys will be able to see my trades, which are weekly. You'll be able to see the dividends in a 6-figure portfolio. And I'll also be giving you guys a heads up on which companies I'll be buying in the future. And the reasons why I just purchased a new company, which is Visa. I first want to do a portfolio update. So to start things off, we can see that as of today, the portfolio is down $700. If we take a look at the 1 week view, we can see the portfolio is down $1,600 or 1.38%. Moving on to the 1 month view, we can see the portfolio is starting to head into the green. It is up $4,500 or 3.86%. This is definitely something I like to see, and it's finally nice to see some green in the market. Taking a look at the 3-month view, the portfolio is up exactly $3,000 or 2.53%. And lastly, year to date, we can see that the portfolio is up $9,200 or 8.26%. As I mentioned previously, this is definitely something I love to see. Finally, we have a year that's starting off right and the market is heading in the right direction. Now, with that being said, I hate to be the bearer of bad news, but when you're a long-term investor, these are only minor fluctuations in the market. The market could completely tank tomorrow and go down 30%, 40%, and quite frankly, my investment strategy and thesis would not change. All of the companies that I hold in my portfolio, which you can see right here, would remain the same. And to piggyback off of that a little bit, if you guys are interested in what holdings I have in this portfolio, they are on your screen right now. Feel free to take a screenshot or pause the video to get a better look. As I always mention, if you guys have any questions about one of my holdings or potentially one of your holdings, let me know in the comment section. But with that being said, let's jump into my recent purchase, and that is Visa. So about a day ago, I put up a poll in my community section on YouTube, and I pretty much asked, hey, which company is higher quality? Lowe's or Visa? And I got 150 votes. As you guys can see, the majority of answers were obviously Visa by 76%. Now, I put this poll up for a reason. I was actually considering buying Lowe's or Visa. In my opinion, I do think Lowe's is at a discount right now and it's below its intrinsic value. But I also see Visa as an extremely high quality business that is also under its fair value. And I think it would be an excellent addition to the portfolio. For that reason, I put my money where my mouth was and I started my stake in this company. As you guys can see right here, I actually started this position with $1,600. I bought in and I have an average cost of $222, which I still believe is below its fair value. And in return, that got me 7.55 shares of this company. If you take a look down here on the right side of your screen, you can see that this makes up 1.39% of my whole portfolio. So this is a fairly small position. Moving on from that holding, let's take a look at Visa's financials to see why I thought that this company would be a good addition to my portfolio. Starting at the top, we can see that Visa is currently trading at $223 per share. If you take a look here over on the left hand side, you can see that they currently have a 31 PE and a forward PE of 25. Now, I know that may sound very high for most of you out there, but this is actually pretty consistent with Visa's PE over the course of its history. Taking a look down here at the bottom chart, this is Visa's PE from 2010 to current day. We can see that if we move this graph along, that Visa has always maintained a relatively high PE in compared to other companies. Being the high quality business that it is, I think this is normal. In addition to that, you can see at the top of your screen, the stock price has consistently gone up as well, while the PE has remained within that 30 to 40 PE ratio. Now, when I was looking at investing in Visa, this is actually something I specifically wanted to look at because when I was doing my overview of the company, I saw that their PE was relatively high. So I did some research and I come to find out exactly what I just showed you guys, and that is that Visa has consistently always had a relatively high PE in comparison to pretty much all of the companies in my portfolio. So putting PE aside for the sake of this overview and looking at this company as a potential investment, Let's move on and take a look at some other metrics. Still taking a look in the value section, we can see that Visa currently has a free cash flow yield of 4.21%. That is very high in my opinion, and it's higher than most of the other companies in my portfolio as well. So that is definitely a good sign in terms of investing. Move over to the quality section, we can see that Visa currently has a Petrosky score rating of 7. Now, if you guys are unfamiliar with what a Petrosky score is, we'll take a look at that real quick. The Petrosky score is a number between 0 and 9 that ranks the quality of a company. The higher the number, the higher the quality of the company. The score is determined by assessing 9 different financial aspects of the company. The company is given 1 point for each of the 9 standards being met. Those 9 standards that they are referring to are right here on your screen. Feel free to pause it to get a better look. With Petrosky score out of the way, let's take a look at the balance section to see how much cash versus debt they have on hand. So at the top, we can see that cash on hand, they have $16 billion. Debt, they have $20 billion. So that equates to net negative $4 billion. As we'll see when we take a look at the free cash flow, that is a minor and small amount of money for this company, and they could easily pay that off if they needed to. Now, moving on to the dividend section, because this is a dividend portfolio, we can see that Visa is currently paying 0.80% for their dividend yield. Now, don't get me wrong, this is pretty low for most of the companies that I own in my portfolio currently, but when you're dealing with a company this high quality, you have to give and take a little. Now, if we look at year to date how Visa has been performing, we can see that the stock is currently up 8%. Now, this doesn't really play into my investment thesis, but I thought it's fun to highlight nevertheless. If we take a look at the 5-year view, we can see that Visa went up 83%. Taking a look at the 10-year view and return, we can see that that was 475%, which I definitely like to see. And just for fun, let's take a look at Visa's all-time return, and it's nearly 5,000% since 2003. Now, if that has any bearing on how this company will perform in the future, it's definitely a good sign. Hopes and wishes aside, let's take a look at their revenue, and as you guys can see on your screen, it has consistently gone up year after year. Now, I don't focus too much on revenue because there are different financial ways of elevating this and artificially inflating these numbers, so I won't give this too much weight. But just so you guys have an idea, in case you're wondering, if you look down at the bottom, you can see that in the last year, their revenue increased by 21%, and over the last 10 years, their revenue increased by nearly 11%. Taking a look at their EBITDA, we can see that it also resembles their revenue. It's consistently gone up, and last year their EBITDA was nearly $20 billion. Moving on to free cash flow, which in my opinion is one of the most important aspects of any company, and we can see that it closely resembles their revenue and EBITDA. That is a good sign in terms of investing. Last year they brought in nearly $18 billion. If we take a look down here at the bottom, we can see that over the last year, they increased their free cash flow by 23%, and over the last 10 years, they increased it by 14%. That is great growth in my opinion, and something I definitely like to see. If I'm going to invest my money in any company, I want to be sure that they can return money to me as the shareholder. And when you have a company that consistently raises their free cash flow, that's exactly what that means. They have the capital to do so. One other aspect I highly recommend everybody take a look at, and that is to compare free cash flow to the stock-based compensation they pay their employees and executives. So if we take a look at this blue graph here, we can see that they paid stock-based compensation $600 million. And if we compare that to their free cash flow of nearly $18 billion, we can make the determination that stock-based compensation is not a factor in terms of dilution. Simply put, they are not diluting us as the shareholder by paying themselves extensive bonuses and stock-based compensation. So another green flag in my opinion. If we take a look at their net income, we can see that it closely resembles EBITDA, revenue, and free cash flow. This company understands how to increase their net income year after year. And not only increase it, but innovate in a way so that they stay relevant, and they can do so without spending a ton of money. So in terms of net income, another green flag for me. Moving on to the dividend, which in my opinion is one of the most important financial aspects as well, and that's because a number of reasons. Number one on that list, in my opinion, it shows that a company is healthy enough and has the financials to back up and pay their shareholders. Now, some companies take advantage of this, and that can clearly be seen if you did a deeper dive and looked at aspects like their free cash flow. But in terms of Visa, comparing their free cash flow and all the other metrics we looked at, and comparing this to their dividend, we can see that this is a healthy company. Taking a look down here at the bottom, we can see that in the last year, they did not raise their dividend, but over the last 10 years, they have increased their dividend by nearly 16%. That's definitely great to see. So not only are you going to get the appreciation of the stock price itself, but your dividend is going to appreciate as well, further compounding this holding and starting that snowball effect, which you guys definitely want to see. So in terms of dividend, this is another green flag for me. Now, another metric that I highly advise everybody to take a look at to see if your holding or a potential holding is diluting you as the shareholder, and that is checking their outstanding shares. Now, contrary to the other graphs we've been looking at, you want to see this graph heading down just like it is. That means that Visa is consistently lowering the amount of shares that they have. In return, that artificially inflates the price of the stock, so you make more money as a shareholder, and it also means that you have more of a stake in the company itself. Your shares are worth more if there's less of them. If we take a look at 2010, we can see that they had 3.3 billion shares. And if we take a look at last year, we can see that number dropped down to 2.1 billion. That's over a billion shares taken off the table. So definitely another thing that I like to see. Moving on to arguably one of the most important, if not the most important financial aspects of any business, and that is return on capital employed. I preach about this a lot in many of my videos, and this is one metric I always take a look at if I'm going to invest in any company. Now, to explain what this is, let's take a look at last year's return on capital employed. We can see that Visa had a return on capital employed of 29%. That means that if Visa invested $100, they received $129 back on that investment. That tells me as the shareholder that this company knows how to manage money and use that money to make more money. If we take a look at the past year's return on capital employed, we can see that pretty much every year is above 20%. If we take a look at 2016, we can see 14%, but that should not be alarming for you guys. The average return for capital employed for most companies is around 8 to 12%. So in one of their lowest years, we can see that they're 14%, they're still above average. Looking at 2012, we can see that the return on capital employed was only 7%, but they quickly fixed that the next year, bumping it up to 23%. In layman's terms, this is exactly what I want to see in terms of a company that I'm going to be putting my money into. I want to know that if I give them money and I invest in them, they can use that capital to make more money. So again, this is another green flag for me. Now, just based off of these metrics and the financials that we just took a look at, this, in my opinion, is a great business. This is a company that I feel comfortable investing my money into. To end this episode, I want to take a look at an article that I came across and just highlight some of the key takes from it. So I was on Seeking Alpha and I was reading a few articles about Visa, and I came across this one. Visa may have the best business model in the market. Now that is a bold claim, and I was like, all right, I got to check this out. So taking a look at the summary section, let's take a look at the first bullet point. Visa is levered to trend towards a cashless society, and we like that the firm doesn't take on credit risk like that of a few of its peers. Now, this is something that I can agree with. When they say cashless society, I think that is pretty much true at this point. It's very rare that I see many people paying with cash nowadays. In terms of my personal opinion, I only use my credit cards. Let's take a look at the second bullet point right here. The firm generates operating margins north of 60%, while it converts roughly half of every dollar generated as revenue into free cash flow. Now, as an investor, that is something I like to hear. When a company can convert roughly half of every dollar generated in revenue into free cash flow, that's how you know you have a good business model. So putting my bias aside, I will say that's another green flag for Visa. Let's take a look at the third bullet point. Visa's dividend yield isn't as large of that of average S&P 500 companies, but the firm's dividend growth prospects are phenomenal in our view. This is a bullet point I don't necessarily agree with. I think there was too much bias put into this opinion, but I like the fact that they admitted that in the last part of that bullet point, in our view. Now, I agree. I think Visa does have the money on hand to consistently raise their dividend if they wanted to, but based on their track record as a company, I think they're going to continue down the same path they always have and gradually raise it over time. Taking a look at the last bullet point, it says, at the high of our fair value estimate range, we value shares of Visa at $259 per share. That implies potential upside to where shares are currently trading at $227 per share. So, Seeking Alpha at the high end of their fair value estimates that Visa shares are around $259 per share. Now, at the time of writing that article, Visa actually went down slightly, so it's currently trading at $223 per share. If they're correct about the fair value of Visa being around $260 per share, that means there is significant upside for this company. Compare that to every metric that we looked at today and the totality of the circumstances, and in my opinion, I think this is an excellent addition to my portfolio. Now, that doesn't completely exclude Lowe's from being on the list in the future. This is definitely a company that I am keeping my eye on as of right now. But with that $1,600 I had on standby, I thought the best company that I could put it into was Visa. With that being said, if you guys are interested in me breaking down Lowe's and taking a look at all the financial aspects of this company, let me know in the comments section and I may be making a video about that in the future. This is going to conclude episode 9 of Road to 1 Million. If you guys have any questions about the topics that we covered today, feel free to let me know. If you guys want to stay up to date with the companies that I'm buying over the course of 2023, don't forget to subscribe. And with that being said, I will see you in the next one. Take care.